Hello traders, and welcome to this particular session. We're going to look at real quick the gold analysis. Yesterday we were looking at the price breaking above this particular zone. Not yesterday, but on Monday we were looking at the price breaking above this particular zone, giving us a retracement. But the price was not able to give us a retracement. But yesterday we were looking now at the price. Once it breaks above this particular level, we look for some buying opportunities, and this is where we had the buys opportunities yesterday. Remember the bigger picture, we are looking at the price maybe probably giving us another all-time high. All right, that's our long-term view. But again, it's always good to make sure that even as we eyeball the long-term view, you do some partials. So from that point to this point, we have about 329 pips that the price has been able to cover so far, right? So let's real quick begin from the daily time frame. So from the daily time frame, what I'll be looking at is first of all, at least the price coming to these particular levels. That's about 34.52 to take out these liquidities, all right? Because we have some liquidities resting there. And then later on, to come all the way to these big targets where we are looking at the price taking out the all-time highs, all right? But maybe probably this week or next week, or we cannot really project or predict when the price is going to come to that particular level. So the reason why it is always important now to mark some structure, we go to the lower time frame and we see how we can be able to get the structures here, all right? So looking at this, of course, if someone was able to get these particular entries, maybe probably people already took profits, or maybe probably if you're holding at break even, that's okay, all right? But at least make sure that anytime you get a setup, you pay yourself for something, okay? So now, let's put this setup aside, all right? Let's put that setup aside. That's what we have on the bigger picture. Also, let's put these aside so that now you can be able to look at maybe some more precise entries, because right now we are looking at more bullish prices. Okay, so at the moment, I would want to take now the Fibonacci. I mark from the high to the lowest, and you see there is a potential of price coming to this particular point. Now let's go to the 1 hour time frame. So when you look at it from the 1 hour time frame, this particular level is again very potential in terms of giving us some buying opportunities. Okay, so the reason why I said if someone is holding the entries yesterday at break even, no problem. In case maybe you're not holding, or in case the price might take you out of break even, then we might want to look at a scenario whereby the price digs deeper into the zone. Remember, this is the buying zone, all right? According to the Fibonacci, this is the buying zone. We're talking about 95 pips zone. So the best thing, how I do it now, I will now regard this order block, right? I'll come now and mark this particular order block. So I'll want to see the price drop all the way down to this particular order block. And give me an entry, because these are low risk entry, right? The goal here is that I'm looking at a low risk entry. Okay, so but again, if you look at this kind of structure that we have here, right? If you look at this kind of structure we have, so this is a channel, a down channel that insinuates that higher chances we might see the price pushing up. So in case the price is going to come to this level, then it will be consolidating or trading within this down channel, all right? But the moment we see the breakout from this channel, then now we will be looking at a potential buying opportunity for price to come to these particular levels, 34.52. Okay, so let me take you back again slightly on the daily time frame. All right. Remember we were looking at this particular what we were looking at this particular peanut, bullish peanut. And right now we have seen the price break above that particular peanut. Okay. So what we want is some bit of a push on the downside, maybe to come and retest this particular breakout. And then now we continue looking for buying opportunities. So let's jump again to the 1 hour time frame. So here I will be looking at, like I said, in case the price comes to this level, I will be eyeballing some long positions from this particular point because it's a high probability setup because we have what? This one will make me now to target the highs there, and of course, maybe probably the price coming to the liquidities that we have at 34.52. So that will be the setup. So here we see this structure here. We see the price creating a BOS there. So that means in case the price comes back again to this level, this is a high probability OB. Okay. So it is always good to go to the lower time frame. So like maybe probably 15 minutes time frame or 5 minutes time frame to try and refine your entries, right? To minimize the risk. Because if you look at the 1 hour zone, this is quite slightly big, 73 pips. So you can go to the 15 minutes time frame and now have your zone minimized to about 40 or pips or about, because for gold I usually do a maximum of 50 pips stop loss. Okay, so and as you can see here we have some quite imbalances. So what I'll be looking at, like I've said, once the price is able to come to these particular levels, therefore I'll be looking for some buying opportunities at that particular point. But what if the price doesn't come to that level? The moment we see the price break above this, okay, so we can push this here. So the moment we see price break above this, create a BOS, then now retrace maybe to the order block that we have there, then we might be looking for some more bullish prices. Okay, we might be looking for some more bullish prices. Remember, the bigger goal is for the price to come to the 3,500 and take out the liquidities here there where we have the all-time high. But again, it's always good to always plan your trades accordingly, like taking partials. Anytime you're in profits, it's good to take some partials, all right? So maybe taking partials here and waiting for the price now to push up, or maybe probably you can intraday. That is taking trades on a daily basis. You take what you need today, then you come in tomorrow and try to look for a re-entry, because gold again is very volatile. I wouldn't promise you or maybe probably advise you, depending on your level anyway, to hold gold for quite to swing trade gold, right? Not unless now you minimize your risk significantly. How I do it myself, I usually day trade it. That is when I get my targets, my entry today. So I exit and then I look for more entries or another entry, maybe probably tomorrow. And my setups are always 100 pips. So risk to reward ratio of 1:2, 50 pips max stop loss, and 100 pips target. So the moment the price gives me a risk to reward ratio, I mean half of my target, that is RR of 1:1, I usually take partials and break even. Okay. So that's what we are looking for gold today. We are still looking at a very bullish sentiment. So in terms of fundamentals, so we don't have any high impact news that is likely to affect the prices of gold. I think only at 5 p.m. we have existing home sales, which is not really high impact news. So we might not see much volatility at because of this kind of news. Not unless now we have any updates from China, US tariff negotiation deal, or maybe any other thing to do with the tariffs that might cause the markets to really be to cause volatility in the markets. All right. So with that, let's keep monitoring that. And I wish you a very beautiful day. I expect to see some volatility kicking in the New York session, like we also saw yesterday. So make sure you trade with discipline, check on your risk management, and I wish you the very best.